Hello everybody, how are you? I am in the car right now, and I wanted to get a chance to talk to you before it got too dark. And I hope that you guys are doing well, and I hope you guys are being financially minded. You guys see me doing a lot of stuff. You see me having a lot of fun talking about the issues of the day. If it's black, I'm there. So I'm not just a finance professor who happens to be black. I'm a black man who happens to be a finance professor. And I want to say hi to John Doe, and I see Popo Naya, Shelley. It was #1 in here, and Free Trader and Terrence B. I'm doing very good. Thank you very much, Terrence. Don Reef, salute Black Soldier. How you doing? John Doe. What's going on? Palm Beach, Florida, checking in. Shout out your city. Let me know what city you're from. Shout out your city. See, Chris Jackson says, what's up? And hit the thumbs up button, by the way, too, because the thumbs up button makes more people come in. So as you come through, hit the thumbs up button. Make sure you subscribe, hit the notification bell, all of that stuff, because you know that black intelligence is in full effect on this channel. We believe in black intelligence. I see Brian from Raleigh, Don Reef from Newark, James Mitchell from Harlem, Dolores for my friend Dame Dash is from Harlem, so I love Harlem. Dolores from Connecticut, Seldom Nesson, I hope I read that right, from Cleveland, Kim Clark, hey, how you doing, Kim? Good to see you. Chris Jackson from Detroit, Edgar from Akron. Edgar from Akron. That's a nice ring to it, doesn't it? So that's the queen. She's agreed to drive the car for me so that I can talk to you guys. So give her a digital round of applause for not just being the most beautiful black woman on the planet, but most beautiful woman on the planet, because you know black women are a step above. But also for being willing to support a crazy ass professor as her future husband, as the man that she loves. And well, I hope I'm her future husband. I guess I gotta impress her enough to. I'll impress her with my stock market knowledge. How about that? Vicky Dillard. Vicky Dillard's in the house. How you doing, Vicky? I love you, sister. You are so great. Let me see. Boyce, you blocked me from commenting on your videos. I didn't block you. Did I block you, Sheldon? Well, if you blocked, let's get you unblocked. If you're blocked and you want to get unblocked or something like that, just email my manager at boycewatkins.com. That's manager at boycewatkins.com, and she can look into it. That's my manager. Also, if you want to do business with us, you can email manager at boycewatkins.com. And truth be told, on the Your Black World channel, we're always looking for interesting black people that want to host a show, or they can contribute, they can do great commentary, they can do interviews, things like that. So if you're interested in being a part of that as well, use the same email, manager at boycewatkins.com. We can't guarantee that she's going to see everything from everybody, but you know, I'm always open to bringing in smart black people into the space. You know, we invited the wonderful Miss Vicky Dillard in, and now she's changed your lives. Michi X was another person we had come through recently. With the rapping Professor Aaron Smith. Do you have is GPS telling you which way?
Yeah, it's telling.
Okay, good. You know, there's a lot of great people that we brought in through Fly Nubian Media, and just different black people with different opinions. There's about 20 or 30 people now that we have just coming through. And my belief is that, you know, when you are black and you have a big platform, that platform does not belong to you. That platform belongs to the community. And that's a personal belief that I have. I'm not just a guy who says, well, that's my YouTube channel, I'm not going to share it with anybody. No, I want to share it with other smart black people, because I know I'm not the smartest person out here. I'm not the one who knows everything. I'm just a guy who knows a couple of facts, and I want to share those facts with you. So let me, where are we going? We're going back to Chicago. Came to visit my parents for a couple of days, so it is what it is. $5 a day investing challenge because of you, Doc. Great, Larry. I love it. What Larry's referring to is that the challenge I've given to black people, the challenge I've given to all black people who want to build wealth, is to invest $5 a day, an average of $5 a day, which is about $150 a month. The average car note in America, I think, is like $400 and something a month. For new cars, people are now spending over $500 a month for new cars. A new car ain't gonna do nothing for you. A new car ain't going to be doing nothing for you in about 7 or 8 years. You're going to be trying to trade it in for another car, and that is like taking all your cash and flushing it down the toilet. Imagine having a big bucket full of money, grabbing that heavy bucket full of money, pouring it down the toilet and hitting flush. If you imagine that, if you can imagine that, then you know what it's like to be in, you know what it's like to go in and buy these cars and spend your money on nonsense and stuff like that. So, you know, just don't, you know, get caught up in that. You can still buy cars. You can still buy something nice. Like, let me show y'all the car. I bought a car. I hadn't had a car for a long time. I just never needed one. I'm gonna tell y'all the truth. Back in 07, when I was first starting my business, the business was going so badly that literally I had to turn my car in. I had to get it traded in because I could not afford the payment. And so I traded my car in to have a business. And the years went by and I just never got another car. And then, maybe by about 2011, 2012, I could have bought a car, but I was like, why would I buy a car if I could put the money into my business? And I never got a car. So this year I finally got a car. Literally, it's almost 12 years later, I finally got a car. Before that I was Ubering and whatever. And then I met this great black woman who already had a car. So I was like, well, why do I need a car if you got a car, right? You got a car. So I did get a car. So let me show this. This is a nice motherfucking car. Excuse my French. Look, I mean, it's an Infiniti, and the kids, here's the thing though. If you're gonna buy a nice car, it's a nice Infiniti. It's got all the little perks, and it's technically, would this be called a luxury car?
Yeah, luxury SUV.
Would you say it's a luxury? Okay, so it is kind of a luxury car, right? But let me just tell y'all like this: if you got kids, man, kids will like suck all the luxury out of that damn car like instantaneously. They would look. Let me see if I can show them how raggedy the damn kids got in the back. Look, so Reese's Pieces. Hell yeah, I gotta blame the kids. Okay, we cleaned it up a little bit back here, but
yeah, because your parents were
DVDs. Oh, that's right. We had to clean up because my parents were in the back seat. But they tore this car up.
They did.
They tore this car to pieces. Like they tore the back seat. And kids ain't got no respect. They don't be having no respect.
Oh, boys.
Damn, unrespectful little.
Can we 100% blame it on the children?
Yes, I always blame it on the children. Because I'm a neat freak, you know that. You know that. She knows I'm lying, because I'm so lying. I'm doing a Jussie Smollett right now.
Sure.
It was the kids, Your Honor. They beat the cleanliness out of me. They attacked me, and they messed up my office and threw the papers everywhere. It's these juvenile delinquents. They were wearing MAGA hats and Disney t-shirts and said they were going to beat me, and they put a noose around my. Okay, anyway. All right, so let me let me get started here. All right, so yes, so the $5 a day investment plan is what I've been challenging. Oh, mid-level luxury. See, John Doe gotta hate. Why you gotta call it mid-level luxury? Damn, that's kind of mean. Anyway, it doesn't matter. I'm not into luxury, so I've never been into luxury. Like this sweatshirt. Like, what was this? What's this brand?
It's a Russell.
A Russell.
Walmart special.
Right, I got a Walmart special sweatshirt on. So believe me, I'm not into like fancy stuff at all. That stuff means nothing to me, and I'm not gonna tell you it shouldn't mean anything to you. Some of you like nice stuff, and I think that's okay. What's up, Ryan McCrary? Ryan McCrary is a brilliant guy. McCrary Financial Solutions out of Philadelphia. I love Ryan McCrary, and I respect him because I just respect the young black men that are strong enough to change the game, that are strong enough to push the world in a different direction. And Ryan is one of those people. He's a young black leader, brilliant black man, and I love you to death, man. So, by the way, if we haven't talked for a minute, Ryan, but email manager@boycewatkins.com. I'd love for you to be a contributor on Fly Nubian King if you want to pop in there. We got a lot of good people on there, from the rapping professor to Miguel Nunez and all kinds of people. But anyway, let me get back to this. So the $5 a day investment plan is basically the challenge I've given to black folks to say, just invest $5 a day in the stock market. And nobody can predict what the stock market is going to do. It may go up, it may go down, it may go side to side. That's not the point. The point is not whether it goes up or it goes down. The bigger point is whether you're preserving your money. The number one rule, the first step toward keeping your money or having money or growing money is preserving it. You got to keep it. Then you earn more money. Then you find ways to earn more money. That's where entrepreneurship and all that stuff comes in, passive income, owning property and all that. And then you got to grow your money. And that's where asset, allocation comes into play, where you own assets that appreciate in value, giving you what is called capital gains. Capital gains are when something goes up in value and you make money just because it's worth more now than it was when you bought it. So ultimately, the first step is to preserve your money. I have found personally, and I've seen this in a lot of places, a lot of people have found the stock market and real estate and their business, especially stock market and real estate, to be excellent places to preserve your money, so that even if you buy a stock for $100 and the price drops to $90, who cares? You still got $90 to show for it. 5 years later, 10 years later, you'll have $90 out of the 100 left over. Now I want you to go back and think about $100 you might spend going to see a Kevin Hart movie. If you go see a Kevin Hart movie, if you went to go see a Kevin Hart movie, say, you're going to Indianapolis, right?
Uh-huh.
if you went to see a Kevin Hart movie in 2014 and you spent $100 at night, buying the $5 popcorn and the expensive movie tickets, taking your girl out to the movies, taking the kids, going out to eat at Red Lobster afterward to get the cheddar biscuits, like, you drop $100 on that night. How much of that 100 do you have today? How much of that 100 do you have left? You have none, zero, nada, not even a penny of that 100. So to me, having 90 out of the 100 with the chance to have more, I mean, most people who invest $100 in the stock market, that $100 has turned into far more than that, right? But that to me is far better than having nothing, right? So that's why I'm a big advocate of stock market investing. It doesn't matter if the market's going to crash. It doesn't matter if people are predicting doom and gloom for the market and all that stuff. Who cares? You got to get in the game in order to benefit. Even a slow car is better than walking. Even a slow, raggedy car will get you to your destination faster than not getting in a car at all. If you had a choice between walking down the side of the road or getting a slow, raggedy car that only goes 50 miles an hour, which will get you to your destination faster? The slow, raggedy car. So that's kind of what it is when you talk about investing, and even if investing goes bad. Now let me jump into the topic a little bit. Hit the thumbs up button. Please hit the thumbs up button. And also, if you want to do stock market investing, you want to learn it on a deeper level, on a level that's going to really benefit you for life. I have a popular stock market investing program at theblackstockmarketprogram.com. Somebody please type that in, theblackstockmarketprogram.com. Okay, so this article that I was reading, I'm reading this on my other phone. There's a guy named Jeremy Grantham who apparently predicted the 2008 downturns. He actually predicted the 2000 and 2008 downturns. He told CNBC on Thursday that investors should get inured to lackluster, or get inured, I guess used to. They should come to expect lackluster returns in the stock market for the next 2 decades after a century of handsome gains. In the last 100 years, quote, "We're used to delivering perhaps 6%, but the U.S. markets will be delivering real returns of 2 to 3% over the next 20 years," the value investor and co-founder of Boston-based asset management manager GMO told CNBC in a rare interview. So what he's basically saying is that, according to his research, his analysis, which is not out of the question, it's not what he's saying based on the arguments he's making, the parameters he's looking at, his prediction that market returns are going to decline is not. I actually can see where he's coming from, right? So he's basically saying that the market should probably give about a third of the returns that it was giving before. Now, what he says here is that over the past 5 years, the S&P 500 index has produced compounded annual growth rates of 8.1%. The Dow Jones Industrial Average has boasted a growth rate of 9.1%, while the NASDAQ is 11.4%. Grantham attributed his call for lower future returns to a stock market he still views as pricey, despite a downturn that gripped the broader market in the latter portion of 2018. So when he says pricey, what he means is that stocks are overpriced, that they're very expensive right now. They're kind of like San Francisco real estate. You go to San Francisco, you try to buy a house, they're going to be like, oh, that'd be $1 million for this 2-bedroom condo, or whatever, right? And it doesn't make a lot of sense. And the ultimate question, kind of comes down to, if I buy it now, is the value going to keep going up, or is it sitting on a bubble? Is it inflated to the point where it's going to have a long-term protracted decline in value, right? Because seriously, if I go buy a condo, a 2-bedroom condo in San Francisco for $1.2 million, that may not be a bad investment. Some people might say, no, it's overpriced. 2-bedroom condo shouldn't cost $1.2 million. If you bought it in, Birmingham, Alabama, or Louisville, Kentucky, you're going to pay just, $250,000 for that. Yeah, that's true. But the issue is, if I'm an investor and my goal is to earn passive income through capital gains growth, or rent it out or whatever, the question is not, is it worth what I'm spending? The question is, because that's always relative, the question is the value going to keep going up, or is it going to go down, right? And the thing about real estate that's really fascinating to me is that there aren't that many places in the country that I can think of where if you bought a house or a condo 20 years ago, that house or condo is worth less today than it was 20 years ago. Even if it was overpriced, even if you were buying some, imagine you're buying, real estate in New York in the year 1995, and people are like, oh my God, the prices are going way, way up. They're so high right now. Don't buy in New York. It costs too much. Well, the prices have probably damn near doubled since that time, right? The stuff that used to be $500,000 is now $1 million. The stuff that was $2 million is now $4 million. So, some would say that it's really not a matter of whether it's overpriced or underpriced. The question is, what's the long-term play here? And so what he's basically saying, which should be reason for some, concern, not even concern, but just pay attention to, is he's saying that the stock market is priced extra high right now. He's not saying that it's not going to grow. He's not saying that money won't be made. What he's saying is that the growth rate is not going to be what it was in the past. That, it was growing at 6, 8, 10%. It's not going to do that anymore. He's saying that despite what the Fed is doing, all the actions and the levers that are being pulled by the Federal Reserve, he's looking at one important measure, and I teach you guys about this extensively in the Black Stock Market program. He's looking at the price-earnings ratio. The price-earnings ratio is at a level that is in a historic high. The price-earnings ratio, because it's so high, what it basically is saying is that stocks are now priced at a level that is far higher than they were in the past. That when you buy a stock, you're buying a piece of a company. And what are you buying? You're buying the right. You're buying a right to ownership of a percentage of that company's income, right? So if I'm a human being could be traded as a stock. I mean, we were slaves, so we know this very well, right? But let me explain how a human being could be seen as a stock. Let's say that you are the young LeBron James, and people think you're going to be the next LeBron. Well, LeBron, if there was a market for it, he could go trade himself as a stock and say, look, if you pay, I've taken myself, my whole future value, I've chopped it into 1 million pieces. So every share costs you $50. And so, but every share is worth 1/1,000,000th of my future income, right? So for every dollar I make, you get 1/1,000,000th of that dollar for every share of me that you own, right? So ultimately, when you're buying stock, you're buying ownership of a company's future income. Well, what he's basically saying is that, you're paying, that he argues that based on what they call irrational exuberance, a term coined by Alan Greenspan, the former chairman of the Federal Reserve. Irrational exuberance basically is when the stock market is having a wild, drunken, crazy party. Everybody's high and drunk and crazy and doing all kinds of crazy stuff. You know how people get drunk at a party and they act a damn fool? Well, basically, he's saying that the market is in the middle of irrational exuberance, right? So instead of being high on dope, the investors are high on money. They're high on cash. Money actually according to Professor Andrew Lowe at MIT, money affects the brain the same way cocaine affects the brain. It affects the same region of the hypothalamus that cocaine affects. So literally, there is such a thing as a financial high. Think about this. Money, when people get money, think about somebody like a little cousin who used to be broke, then he got a little bit of money, right? A little bit of money, maybe a little bit of fame to go with it. So suddenly what happens? His confidence goes up. He starts, he's wilding out. He's living a different life. He's approaching girls he never would have approached before. So that is the confidence that might come with him having a little bit of money in his pocket. Tell me if you know what I'm talking about. Tell me, I know when I used to get my paycheck at Taco Bell, I would feel better about life than I did when I was broke as hell. A man does not feel as good when he's broke as hell as he does when he's got money in his pocket. A woman does not feel as good when she's broke as she does when she's actually financially secure, right? So, the same thing is true with the market. When the market's doing well and investors are making money and prices are going up, irrational exuberance could be around the corner. Irrational exuberance is where the market starts feeling good. Investors start taking additional risks. Investors start bidding higher prices for the same assets. Investors start, saying, that stock, the price is at $50, but I'm willing to pay 55. Oh, it's at 55. I'm willing to pay 60, because everything in the stock market, every price you see is a result of somebody bidding on that stock. So if you imagine people bidding on something they really want, you can see how the price could get super, super high. So long story short, basically what he's saying is that there is a market crash predicted in the future as a result of this irrational exuberance that has pushed prices up to the point where you're at risk. When you buy into the market, you're at risk of enduring what is called the winner's curse. The winner's curse is a term in economics. The winner's curse is where you think you won, but you really lost. The winner's curse is where you're in a bidding war. Let's imagine you're at an auction and you're bidding on, let's say that they're auctioning off, Tupac's old Air Jordans, right? Tupac's Air Jordans are for auction, and you're like, man, I love Pac. I'm a big fan. I want to own those Jordans. So the first bid is $50. You bid 100. They bid 150. You bid 2. They bid 250. You bid 3. They bid 400. You bid 5. They bid 6. You bid 7. Then they bid 1,000. You bid 1,400, because you're determined to win this auction. You're like, I gotta win. I gotta win. I gotta win. Next thing you know, you paid $5,000 for a pair of sneakers, right? And so you get these Tupac sneakers and you're like, yes, I won. And people are like, congratulations, you won, congratulations. But then you take the sneakers home and you're like, shit, what am I gonna do with a pair of $5,000 sneakers? Like, what am I gonna do? Like, I can't sell them. Nobody else will pay this much for these sneakers, so I'm stuck with them. And I don't really know what to do. I mean, I can tell my friends I own Tupac's old Air Jordans, but how much are those Jordans really worth? So you might start to feel what is also called buyer's remorse, where you have remorse. You are remorseful of the fact that you made that purchase. Well, that's the winner's curse. The winner's curse is where you give up too much to try to win. You're so caught up in winning that you don't realize that by winning you actually lost. Some people hit the winner's curse when it comes to dating and relationships. When I was at University of Kentucky, there would be these basketball players that all the girls wanted to date. So you'd have 4 or 5 girls competing for the same guy because he's 6'6", he's good looking, he's a star of the basketball team, he's going to be in the NBA, blah, blah, blah. So one girl wins, one girl gets a chance to date him, one girl gets to be his wife, and then 10 years later, you're watching them on ESPN where she's telling some terrible story about how her husband was abusive and he spent all the money and he became a drug addict and an alcoholic and he was having sex with 1,000 women a week, and then she realizes that she hit the winner's curse, that in the beginning she thought she won, but really she lost. So ultimately in the stock market, what he's referring to is connected tangentially to the winner's curse, in the sense that he's saying that, you know, that basically the market is overpriced, in that if you're buying too much into the market, if you're putting too much of your portfolio in the market, you're going into a situation where you might be buying assets that are deeply overpriced. I think that is quite plausible, particularly in the short term. Like, I do think, I could imagine, well, here's what I can imagine. Again, he's a financial expert. I'm a financial expert from different perspectives, though. I was from academia. Now he's out here actually running a portfolio, so you got to give him props on that. He's a smart guy. But my position on that is that I would probably be more deeply concerned. I see the possibility of, say, a 3 to 5 year market dip. You know, like a Great Depression is not out of the question. Every time the economists think that they figured out how to avoid a depression, they have another one, or they'll have another deep recession or whatever. I've seen the same signs that he sees. When he talks about the price earnings ratios being too high, I agree with him. They are too high. My $1 million question, though, is whether or not, you know, we've hit what is called a regime shift. My question for him would be, how do you know that it's not possible? That because we've got so many new investors that are flooded into the market, you know, you got apps like Acorn, Stash, and Robinhood that are making people invest who've never invested before, right? So now what's happened is you're getting a natural price increase because you got more people trying to buy the stocks. It's like, imagine if you have a little neighborhood with 10 houses and suddenly everybody want to live in that neighborhood. Well, what's going to happen? The prices of every house in that neighborhood are going to go up because people are going to be bidding on the houses, right? So ultimately, my argument would be that is it not feasible? It could be possible that what he's seeing in terms of a historic high in the price earnings ratio could be a result of people simply deciding in America that they're willing to pay more to own a percentage of a company than they were willing to pay in the past. That, you know, that $1 billion in lifetime earnings now has a higher, what they call present value, than it had in the past. So ultimately, I think what the guy's saying is a possibility. I don't think that it would, for me, it's not going to change anything about how I invest. I invest I invest for the long haul. I diversify. I consistently put a percentage of my income into the market every single week. That's what I've been doing for probably 20-something years. I'm gonna keep doing that, and it's worked extremely well to this point. Even when the market goes down, I still have money. I just have a little less than I had the day before, but it's still there, right? So, you know, my point to you is, be an investor. I don't see anything in this article that says you should not invest in the market. I think even if it crashes, I see the sister here says, was it Paulina says some predict it will crash this year? Yeah, well, you know, if people ask me, they say, Dr. Boyce, do you think the market's going to crash? Do you think the market's going to crash? I say, absolutely. The market is definitely going to crash. There is absolutely no question whatsoever in my mind that the market's going to crash. That's like asking me, is it ever going to rain? Right? Is it ever going to rain in your neighborhood? If I were to ask you that question, that would seem like a weird question, right? You'd be like, of course it's going to rain, right? But the reason rain is not a problem is because the sun eventually comes out. So if you're a person who says, I heard it's going to rain, So I'm never going to go outside because I never want to get wet at any point for the rest of my life. Well, that would sound a little bit weird, right? Every investor, Warren Buffett on down, has dealt with a market crash. Every single investor has seen the market go down. Just like love. Remember New Edition said, sunny days, everybody loves them, but tell me, baby, can you stand the rain, right? So that could be an investment song. It's like everybody loves the sunny days of investing. Everybody loves when you're making money, but tell me, baby, can you stand the rain? Can you stand the rain? Peace Johnson, can you stand the rain? Derek, can you stand the rain? Vicky Dillard, can you stand the rain? Ruby, can you stand the rain? That's the $1 million question, because an investor is not somebody that always has the sunny days, because everybody loves them. Everybody loves the sunny days. Everybody loves having money in their pocket. The investors are the people that can stand the rain, and they endure the rain so they can get right back to the sunshine. Do you understand what I'm saying? So the market crashes will come. Like they say in the song, in the New Edition song, storms will come, this we know for sure, right? That's a perfect investing song. The bad days will come. Crashes will come, this we know for sure, but can you stand the rain, right? So ultimately, at the end of the day, I never invest thinking that there'll never be a day I won't lose money. I never invest thinking that there won't be a time where there will be a prolonged period where my asset values are declining. The question is, will the good outweigh the bad? And that's the $1 million question, and that's what tends to be true for investors, and that's why investors have more money. If you wanted me to pick a factor that is the greatest predictor of whether or not a person will have wealth or have no wealth, right? You take two people, start in the same place in society. Both of them got working class parents, both of them born in poverty, both of them born rich, don't matter. Exact same circumstances, same race, same gender. The number one factor that will determine who will have money by the age of 40, 45 versus who will be broke is, are you an investor? If you're an investor, then your odds of having wealth are so much higher than everybody else. So do me a favor, hit the thumbs up button. Please hit that thumbs up button to let everybody know what's going on with this channel. I see you made money off Nike stock, Peace Johnson. I think that's great. Don't just invest in Nike. You should invest in a lot of companies. Don't ever put your eggs in one basket. That's the number one rule of investing. If you want to learn more about investing and you want to get a degree in the Black Business School, you know, we're building this empire. We're building this educational institution for our people, with our professors, with Black professors who love you, who teach you what you really need to know, and who teach you at a price that is very affordable, literally $3 a day, less than the cost of going on a trip to McDonald's, and you could get a degree. You could be some of the inaugural students out of the business school. Feel free to go visit theblackstockmarketprogram.com. There are other programs there. We have our kids programs, things like that. Go to theblackstockmarketprogram.com. So make sure you subscribe, hit the thumbs up button before you go, and I'm done. I'm going to get out of here. So I hope that this conversation is helpful to you. You know, everything this man says makes perfect sense. I don't disagree with him. I think, you know, I look at him like, yeah, he could be right. But at the end of the day, another thing is that people make a lot of money writing doomsday books about the market. There are a ton of people who every year they predict the market is going to crash, and everybody listens because people like bad news. And so what I'm saying is that, you know, behind the bad news, there's usually some good news, and they don't tend to report that as much. So please hit the thumbs up button for us on this channel. Also, if you want to be notified when I go live, please text the word Boyce to 31996. Text BOYCE, Boyce, to 31996. I'll see you guys later. Have a good day. Talk to you soon. Bye-bye.